Welcome back, my awesome people. Today, I am back with Si Katara. He is the founder and CEO of Tapp Alpha. Now, you must have seen at least one of our interviews. They always are amazing, amazing conversations, hidden gems, things that many people don't talk about because the ETFs that Tapp Alpha deals with, TSPY and TDAQ, one is the underlying of the S&P 500, the other is the underlying of the Nasdaq. These are two unique ETFs. They both deal with option strategy, covered calls, and you not only get the appreciation of that sector, but you also get the distribution every month. And so we are looking forward to diving in with Sai again, talking about the recession that might be coming up, rate cuts, TDAQ also got listed on the CBOE. So we're going to talk about what does it take to get listed on any type of stock market, whether it's the TSX, if you're in Canada. So we're going to take a deep dive into that. So stay tuned to the end because our conversations are always, always the best. Sai, how are you doing today?
Jacob, great to be back with you. It's so interesting to think back to the very first conversation we had over a year ago. And we were like, we're still in the naive pool, like the new baby duck in the industry. But like where we were then compared to where we are now, it has been an unbelievable learning experience. And it's been so fun to have like a constant, resource like you to interact with because I can almost like track the growth and the experiences that we've had based on the conversations you and I have had. So it's really good to be back with you.
You know, I love hearing that because that's exactly how I feel. Because our first conversation was more of introducing the ETFs, and now we're talking about listings. We're talking about expanding even more. So I've seen the growth, I've seen the milestones that you guys have hit, and I'm looking forward to diving in more because this is incredible. Both ETFs are pretty much beating the indexes, and so audience, I'm sure you've seen the hits that we've been taking the past couple of weeks, but TSPY and TDAQ have outperformed those indexes, and we'll talk more about that. So Sai, let's get right into it. So for those that did not, which I don't know why, did not watch our previous interviews, can you tell us about yourself, your journey? What first inspired you to found Tapp Alpha?
Yeah, I'll do the abridged version, and then hopefully people will watch the others too. But the long and short of it is, I didn't come from the finance industry. I was an engineer, computer engineer, sort of coder. Built and ran a software company before starting Tapp Alpha. And the real driver that got me started was, necessity is the mother of all invention. I needed to have income on top of my S&P 500 exposure at a time that I was transitioning from my last company into figuring out what the next adventure was going to be. And the thing that actually did it for me the old fashioned way was covered calls. But the brand new sort of tool that became available when I was doing this was zero dated covered calls. And for folks in the audience that don't know what that is, zero DTE covered calls, all it means is it's an option, but they just expire every day. And I love that idea as an engineer because of the precision to manage risk. And so that was kind of the thing that I wanted to try and see what kind of outcome I could get for our family. And lo and behold, just doing the options related trading that I was doing on top of still owning my S&P 500 shares, we were able to cover a significant portion of our monthly expenses. And this was also at a time where we were going to have our first, we were growing our family and we were going to have our first baby. So that sort of like combination of circumstances was really powerful for me because of the impact that it had on our family. I had so much financial stress going into this transition, but then being able to do this strategy really alleviated so much stress. And really, the long and short of it was, how do we take this, tap into the capabilities that I was able to sort of deliver for our family, and deliver similar outcomes for other families like ours? And that was the whole sort of nexus of Tapp Alpha. I had shares of the S&P 500, but I wasn't getting access to their full potential. And that was what the whole thesis of the company was. Tap into the potential of what you already have in order to sort of create a brand new revenue stream in order to sort of check the boxes you need to check. So that's where we started. We launched TSPY as the first ETF back in August of 2024. And then we wanted to run it and give it a full year. And that year was action packed. August 2024 to August of 2025, there was just a lot of volatility, a lot of interesting market conditions. And it really proved the merit of the strategy to us and to our investors. And so that's when we said, hey, it's working. It's delivering what we want it to deliver. Now let's think about expanding. And so that's where we ended up just launching TDAQ which is the same strategy, zero DTE strategy on top of the Qs, and we'll continue to sort of do product development into the future. But the whole goal was how do we make really powerful financial tools like zero dated options accessible to everyone? And that's what we've been able to do since we started a little over a year ago.
You know, finance and investing truly is a freedom maker, especially when you're able to reduce your monthly expenses. And sometimes tough times might call for a new skill to be built or something new to learn to kind of help you out. And so it's awesome that you took your own personal skill that you developed and now transferred it to an amazing company that is definitely outperforming the indexes. And to stay on that, what are your expectations currently? Because as you know, the market has been crazy, and the past year, are your expectations to make sure that the appreciation or distribution stays steady, or what's the game plan between with the covered calls?
Yeah, it's been actually really nice. So you saw the volatility we had, for example, in April of this year, 2025, the ups and the downs, and there's been a big recovery since then. But through the whole volatility that we've seen in this year and last, we've been able to sort of keep our distribution level very, very steady. And it's hard to do it because you think about it, it's like the markets aren't steady. So how are you doing a steady distribution? And so we've been able to dynamically sort of fill the hole with different kind of components of income to equal that sort of steady distribution. And the reason why we did that, we talked to a lot of investors as we were launching the products. And you think about people that are in retirement or that are, supplementing income with covered call strategies, for example. But how do you plan if you don't have at least some reliability on the income that's provided to you? We can't guarantee the long term of what distributions may or may not be just because no one has a crystal ball for the markets. But we work hard to try and make sure we deliver consistently and do so in a way that's responsible, because when you work really hard to build a nest egg, the last thing you want to do is start to see that wither away over time. So we really are, one of the big market opportunities that we saw was this kind of new category of funds that's sort of growth and income. And that's really what we want to deliver: growth, where you get access to the underlying exposure, whatever the index is, and then income that's generated through the covered call strategy that's distributed on a consistent monthly basis. So, we really, really wanted to fill that space. And over the last over a year, I feel like we're doing a really good job to make sure that we're communicating effectively, being transparent, and sharing kind of what's under the hood so people know what they're getting into. And there's no right or wrong, but it's just what's right or wrong for you and the decisions you have to make for your family. So that's what we've done. And people are responding really well to the product sets that we've had. And you can kind of see it in the AUM growth of the fund that we've had since we've since we started this year. What was the number? New Year's Day, we had 13 million in assets in 2025. And now we're like knocking on the door of 199 million in assets across our product sets.
That is an
So
amazing
it's
response.
it's been, and it's really a testament. I think the DIY sort of retail investors, the ones that are smart, do the research, kind of understand the why behind the product sets, are driving all of it. And it's that sort of ability to adopt quickly and then take benefit from it, has been really the main driver, the tailwind behind it. And that's been the most fun for us too, because we hear a lot of responses from people that are investors in both products, and the impacts that it's had for them, and then maybe even some suggestions for future products or things that might be a good fit for them. So it's really been a surreal experience from the beginning to sort of build from what was a very simple idea and now sort of build a company around it.
No, it's absolutely amazing because both yield distributions are in the double digits and it's still growing appreciation wise. I own TSPY. I haven't jumped into TDAQ yet. Team TSPY. I pretty much jumped in last year when we first had our conversation, and even just my percentage growth has already, it's in the double digits. I've gotten over 10% in appreciation. And I think that a lot of people are not investing that the way that they used to, right? Covered calls might be a new strategy to them, but they're willing to give it a try because they see the proven method. They see the distributions coming in. And I think that regardless of what the index does, I think the covered call is such a genius idea because many of my audience are covered call investors, including myself. And so I think with TSPY and TDAQ being covered call plays, you kind of can't go wrong unless, some massively drastic thing happens to the overall market because you're covering indexes. You're not really covering individual companies. And so looking at for example, North America, interest rate cuts. There's a lot of talk about it. A lot of things are happening. The market jumped today because there was a little bit more hope that there might be a rate cut. What are your thoughts on rate cuts and the tech sector? Do they go hand in hand? Are they opposites of each other?
Yeah, I think so. It's really interesting to see the policy pressure that's happening in order to like lower interest rates. And this is Jerome Powell's sort of last hurrah as in his position in the Fed, and they're talking about putting a new person in. But all of the discussion now and the pressure from the administration is saying we're going to continue to lower rates. What that means for equities obviously, when rates go down, equities go up. And in the long term, one of the big challenges when, we talk to a lot of advisors too, they're working with income portfolios that still use, traditional methods like bonds. Well, bonds are tied to interest rates, and so the fundamental mechanism that delivers income for bond portfolios is going to continue to go down potentially. So a lot of folks are asking the question, well, what do I do to replace that income? And one of the answers is instead of being tied to interest rates, options are tied to volatility. And so that's one way in order to harvest volatility and you kind of convert that into income to fill some of the gaps that people are seeing with interest rates coming down. The tech sector is really going under an unbelievable transition right now. And a lot of folks are looking at the lens of PE ratios and things from the past, where we haven't seen a PE ratio in the S&P above 16 or 18 for sustained times. Now we're at 22, 25. But one of the things I've listened to a lot of analysts from the big wirehouses, and they talk about this is a new paradigm where the multiples are changing now because of the opportunity that's ahead. So you're seeing all this expense and expenditures going in from a capex perspective into infrastructure for AI. And you can look at the macro level. I'll speak from the anecdotal level and take it for what it's worth. But I started Tapp Alpha, started kind of going through this process in October of 2022. ChatGPT came out in November of 2022. So everything that we've been able to do has been amplified by the usage of AI. And the benefits are real. I looked at what I was planning to do because, for folks that don't know, Tapp Alpha has an underlying fintech solution. So there's a lot of technology that helps us drive our funds. And I thought, okay, in order to build what I need to be successful in this, I'm going to need two developers and a product manager. That would have cost $1 million a year. And instead, I was able to build the same tech stack directly in a matter of months for the $20 a month that it costs to run ChatGPT. So you see the difference. And honestly, like to the entrepreneurs out there has never in the history of the world been a better time to start your own thing than right now. And leveraging those tools with AI and technology are a core driver of it. And it's just going to get better and better, and the speed is going to pick up. So you'll see, I think you're going to continue to see growth. And there's a reason that there's a lot of bubble talk, but this is different. The outcomes that we're seeing from the technology drivers out there are different. And I think that's one of the things to keep an eye on. And that's, I think, where there's been a lot of bullish sentiment in the marketplace.
I think you're absolutely right. I personally don't think it's a bubble. Like, I mean, a bubble is something that is kind of in my head a facade, right? Like, the numbers are fudged, things are moved around. I think when it comes to AI and tech, yeah, there are tons of companies that might just throw the AI word around, and yeah, they might, eventually kind of leave the scene. But the true AI, the true tech, those companies, they're going to be around and they're going to boom even more. Like I know Nvidia right now has been getting a hit and all the slack, but I think Nvidia is definitely a powerhouse and will continue to do so, especially with the other Mag 7 members as well. Tapp Alpha will definitely get there soon as well.
Baby steps, yeah. But
uh,
fingers crossed.
Definitely. since we're on the talk of technology and TDAQ, we had to talk about the bell ringing. So recently, I think it was back in October, you were able to ring the bell for TDAQ to be on the stock market and start trading on the CBOE. Can you tell us more about that?
That was one of the highlight experiences that I'm going to carry that memory with me for the rest of my days. It was unreal. And it was unreal for a lot of reasons. One, just it's always been a dream as a technology entrepreneur to be able to ring the bell. But to do it actually at SIBO was remarkable because I remember walking in the Chicago Trade Building and they were pointing down the hall and they see that room right there? That's where the idea of options was born. And I was like, we built an entire business on an idea that originated in that room right there. And that was unreal. And then to be able to go up, and then, the CBOE is one of the last open trading pits that still exists. Everything else is purely digital. But there's actually like live outcry trading going on with the 160 traders that are on the floor. So you walk in and there's just all this energy. And to see our logo like all over the exchange was unreal. And I got like emotional because, the logo that we have for Tapp Alpha, I've kind of like incorporated the company in February of 2023, the same month that my first daughter was born. And the logo, when she was 3 months old, it was like 2 in the morning. And she was up and I was feeding her. And I was like, well, I might as well be productive. And so her and I designed that logo at 2 in the morning when she was just a little baby. And to see that projected on the trading floor at the SIBO and then to be able to ring the bell in front of it was just, it was a dream come
That's
true. It
a
was
beautiful story.
unbelievable.
No, that is truly a beautiful story, and that is something that will live on forever. I know I couldn't make it when you invited me, but definitely the next ETF I will be there. And
You got
so
to be there.
I will be there, Chicago, you know. What is the process to get listed? I know some people will just see it on MSNBC or they'll see it on the finance channels, but what is the whole process? Because I'm sure it takes a lot of, regulations and due process. Can you walk us through it?
Yeah, it is really in depth, and it's in depth for a good reason too, because when something is publicly listed and traded, transparency is really important and checking all the boxes. You're basically taking, imagine like a big like mound of clay, and you're shaping this clay to be in the exact frame and box that you can put on the shelf in an exchange so it can trade efficiently. And to do that, there's a lot of steps. The first biggest one, is you have to have oversight of the fund. So there's a board of trustees and directors that is ultimately responsible to make sure that all of the funds that are on the platform, their platform is basically like oversight of that board. All of those funds are checking the boxes for the requirements for the SEC. There's this one big piece of legislation. It's called the 1940 Act. And in it, it has all the sort of blocking and tackling you need to do to be a regulated investment company, which is what an ETF ultimately is. So that's one of the biggest things is you need the board and the trust that has the oversight. And then you go through all the steps. And it's so funny. Every step is tied to the name of the subsection of the legislation. So I'm just going through this now for some new funds that we're doing. Oh, you have to do a 15C approval. Why is it 15C? Because that's the chapter and subsection in the legislation that requires you to do these next steps. So that's the really big box. That's like kind of the roadmap is this
So it's
40
very
act.
detailed. So they literally connect
It's
it to where it's supposed to like which legislation it connects with. That's actually really I would say very accountable.
then that's one of the biggest things is accountability because everyone has access to it. And so it really is about safety ultimately and transparency. If you're going to trade publicly, you have to basically measure up to the rules. So that's one of the big things. And then you've got to go and find all the cast of characters that'll help you operation to implement the fund. So think about it, like hundreds of millions of dollars go into an ETF. It doesn't come into a normal bank account. It doesn't come onto anybody's mattress. It sits in a custodian account. And a custodian are like one of the big banks, like US Bank, Citibank. So those assets have to live somewhere. And then you need people that'll help you sort of trade on those assets. So you need brokers, you need settlement people. There's all this cast of characters basically that help you operationally implement whatever your strategy is in the fund. But tip to tail, launching the first fund, I think there's maybe 30 humans that are have their hands on getting TSPY kind of running and going. And so one of the biggest challenges that you have when you run a fund with that many people sort of involved, how do you keep everybody on the same page? And the most shocking thing to me as a technology guy coming in was that everything was still done with email and spreadsheets. And I was like, are you kidding me? How are we going to do a daily transaction when it takes
Wow.
2 hours just to get everybody on the same page? So one of the first things we did was automated all those processes, and where it took 2 hours down to under like probably 2 minutes to 3 minutes now to get everything done. And we're going to even streamline it more. But like, we've got to get the manual stuff out. And it's 2025, it's 2026. We got robots walking the planet now, and we're still doing email. So that was kind of one of the surprises in coming in. But that's where the opportunity is. And it's really interesting because that's also one of our kind of secret sauces is we can execute in a really nimble way where we can trade multiple times a day if the market requires it and our rules sort of stipulate it. But other funds are kind of like one and done, or some funds don't have any flexibility. They have to set a rule, and it's the same thing every day. So one of the most powerful things is being dynamic because we've automated a lot of the processes so that we can respond very quickly.
And that's
But it's
actually that's actually the benefit of being someone who knows how to use technology, who knows how to code. Like you're an engineer, so you can take all that prehistoric methods and say, okay, let's usher in the new age. And so that's exactly what happened. And who knows, maybe the technologies that you produce from this problem that's occurring with all these people can somehow eventually help out other investors or people who want to go public. And that actually leads me to my next point. If you were to give advice to, a finance person or company that is trying to go public, what type of advice would you give them now that you have kind of gone through it a couple of times?
Yeah, like bringing like an ETF product to market, I would
Yeah.
say the first thing is um, don't don't believe the hype that everyone you talk to knows what they're talking about. Ask the hard questions because honestly, coming into it, you get a little intimidated because you're working with these huge reputable institutions, but institutions are a victim of like pattern and past habit. So if you come in and you have fresh eyes and you see things that don't quite make sense, like be the person in the room who's like, I don't know what that means. And ask the questions in order to sort of uncover what's really going on. And in many cases, when people say, no, you can't do that, and you ask why, what's the main driver behind it, you can actually get through those kind of friction points in order to deliver something that's differentiated. So that's one of the core things. Like number one, don't be afraid of the process to do it. It is not that hard. It is an amazing place to learn. It is also one of the fastest growing sectors in finance right now is the ETF market. It went from 10 trillion to 13 trillion in the US and now it's continuing to grow. Like we need good people in this industry right now. And what's remarkable is like I go to some of these ETF conferences and I look around the room and it's the same faces. I'm like, wait, it's this handful of humans are running $13 trillion of assets. So we need good talent as we're going to continue to grow as an industry. There are patterns, processes, people that will help you sort of deliver kind of the outcome that you want, but don't be afraid to ask questions and don't be afraid to ask for help. And the only reason that I'm here is because Tuttle Capital Management, who's our trading sub-advisor on this, and we're partnering with them on other projects, like Pete from Tuttle brought me under his arm and he was like, you should really think about doing what you're thinking about doing, but do it in an ETF. And I was like, there's no way I could launch my own ETF. He's like, yes, you can. Come with me. I'll show you how it's done. I'll introduce you to everybody, and then we can help you get it to market. So don't be afraid to ask. ETFs are like, yeah, people are like, it's highly competitive, but it's really collegial because there's so much opportunity. There's nothing, you don't have to fight over anything. So if you're curious about it, feel free to reach out. And there's a lot of people that can sort of help get you on the map to get listed and get going with whatever your idea is for an exchange.
Shout out to Tuttle Capital. I'm actually going to interview him in a couple of weeks, but you're absolutely right. ETFs are the new wave. I mean, you can do so many strategies with it. You can definitely, it's kind of like an egg basket. You're not just putting in one company. You can do multiple different companies, different sectors, different industries. And I think with TSPY and TDAQ, TSPY already has an S&P 500, so that's pretty much everything. And then you have the Nasdaq, which is the Mag 7 and other tech companies, which I think, of course, is the future of pretty much society. Now let's take a little pivot and talk about what's going to happen in a few months. 2026 is around the corner. We've had so much talks probably in the past year about a recession coming up. A lot of countries have avoided a recession this year. I mean, Canada is in a technical recession, but they're still denying it. But we're technically somewhat in a recession, and people are saying 2026 will be even more crazier. What are your thoughts, of course, on 2026's recession talk, and where does Tapp Alpha, or what is Tapp Alpha doing to, in case, prepare for this economic downturn?
Yeah, it's such an interesting point, and it's one of those things too. When you watch the news and like the finance channels, it's a big topic of conversation because it's what gets eyeballs and clicks. But ultimately, like the future of the economy and what's going to happen right now really depends on the macroeconomic data that's coming in, and it depends on policy that's going to be there moving forward. And there's just a lot of support right now from the policymakers to try and prevent recession from occurring. If and when things top out in the equity markets, it can't go up forever. One thing that's impossible to do, no matter how hard people try, is time it. And so that's one of the mantras that like I have. It's not timing the market, it's time in the market and doing it the right way and strategically. That's what I love about covered call strategies is they're not, it's a hedge. So like you're not just beholden to what the markets will do because you're writing options on it when things go down or go sideways, you still have an opportunity to generate value. And so for Tapp Alpha and T-SPY, we're going to continue to do what we've been doing. And in my like bad analogy, you ever go to the carnival and they have like a basketball game and they're like, okay, you get three shots and then you get to win this big stuffed animal. Well, the reality is the hoop is almost exactly the same size as the ball. So you have to hit the hoop just right. But in a covered call strategy, when the market's going up, 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 that hoop is small. You got to hit it just right in order to get the upside and generate accretive income. But when the markets start to go sideways, that hoop gets bigger. It's a bigger strike zone in order to sort of collect options premiums to fill the gap that you might be missing on the equity side. So for all the covered call strategies that are out there, a sideways market is actually sort of the ideal environment in order to manage, opportunities like that. So irrespective of what happens, if you have a timeline that is measured in years and decades, um, the short-term blips and the recessions and the ups and downs, they really shouldn't keep you up at night because if you have that long-term belief that markets will return what they have historically, and then you have a strategy like a covered call strategy or a put strategy, whatever it is, those things will fill the gap so that you'll get through the short-term turbulence in order to get to your long-term goals. That's the real lesson, I think, behind all of the volatility that we see. And there may or may not be a recession in 2026. It may continue to explode like it has. Nobody knows. But in that event, are you positioned correctly? And to folks that know my story, in 2022, when I was doing the strategy on my own, my biggest worry was that I had to sell my shares of S&P 500 to make ends meet. And if I had to sell my shares in 2023 or 2022, and then I missed the uptick in 23 and 24, that would have been the biggest financial disaster for my family. But I didn't have to because the strategy allowed me to keep my chips on the table, participate in the upside of the S&P, and generate meaningful income so I could make ends meet in the short term. So that was the balance that worked for me. And through many, many market cycles and many conditions, I think it's a strategy that's pretty solid to help families move forward.
Well, for one, I loved your basketball analogy. I'm sure a lot of people
Yeah.
now can visualize it. They're like, "Oh, okay, so a sideways and maybe even a downturn is not that bad." So I think when it comes to, because I mean, for the past 3 years, things have been so rocky that there's more downturns, I would say, because a lot of us who are covered call investors, we were just kind of coasting. We were just like, "Hey, we're relaxing. Let's just let things go up and down as they wish." But that income coming in is pretty sweet. And so when we're looking at 2026, as you said, it could go up or down. It's not about the timing; it's the time in. And thankfully, you didn't sell your S&P 500 shares. But when we're looking at 2026 as a whole, who should we believe? Should we believe the finance experts or the actual politicians, or just kind of look at the studies on our own? Like, oh, unemployment is this crazy high. The data says a lot of people are not consumer shopping. So where is your where do you get your knowledge from? Because I think it's so awesome. And how can we kind of get some knowledge too when we're watching whatever we're watching?
It's so interesting because the sources of news are they have so much hyperbole. There's this like amplification and extremism. But if you just look at the data pieces that come out, so like I watch tier one data. So I watch CPI, so inflation, PPI, so producer and consumer side. I watch jobs reports. I watch unemployment numbers, and I watch interest rates, and obviously quantitative easing and monetary policy as well. But if you look at those, I'm a pattern person, and the whole game is expectation and actual. And so just look at what's the expected number for any of those metrics and what's the actual, and are there surprises? Now, one of the big alarms was like the unemployment revisions that had happened by, they missed by a million jobs. Those are signals to like put up the spidey senses. But I love just looking at the data, actuals versus expectation, and then using that as my lens to filter out all the noise, because all the channels that you watch and news that you read, there it's meant to excite you so that you get clicks and you're going to want to watch, and then you're going to want to generate revenue for them. So just take the noise out, look at the actual data. You don't have to be an expert in any of it, but all of it has a bar and the actual delivery, and that will give you a sense of where things are kind of trending. And then you watch it over a couple of quarters, and you start to get a sense of like what's going on in the economy, where are things headed. So that's my baseline for everything. And then you can put on your favorite channel. I usually watch it more for entertainment than actual news. But and
Same
then
here.
the
I'm like, what are they
politicians,
talking about today?
yeah, and the politicians just don't even just put the earmuffs on. It's not even worth
It
it.
literally is just entertainment. But no, you know
Yeah.
what? That's actually a great, great point. Look at the expected and then look at the actual. Because a lot of people just they see all these words and documents and then they get flustered. So I think what you just did right there was show a lot of people that if you just look at the expected and the actual, that can kind of give you a good sense of where society is, where the market is, and where finance is going to be in the future. So now let's talk a little bit more about you, Si Katara. So what partnerships or with financial institutions, fintech platforms, or other exchanges are you currently exploring for future growth strategy?
Yeah, we made some really good connections when we were at SIBO in Chicago. A lot of really smart people there, and it's sort of the birthplace and exchange room for options. We sort of see ourselves as filling the role of like the zero dated or short dated growth plus income ETFs. And there's lots of incarnations of that. We have two now, but there's a whole suite of things that can be built. So working closely with the exchanges to kind of know what's next on their radar will help us with product development and product roadmaps. We work very closely with Tuttle Capital Management as our trading sub-advisor. So we're talking about taking our sort of expertise, which is zero dated option strategies on index to deliver growth plus income products. And then they are really sort of a maverick and an innovator, especially with like leverage and different things. So finding the middle ground that will help our investor base sort of achieve their goals are other places. And then there's other groups like Finiat. They're a fintech company that helps advisors. So we're working with them on some of their portfolio allocation models and things like that. But it's so interesting. All of these people are very smart, and a lot of them have been in the industry for a long time. But the thing that connects us is the relationships. These are just great people that I love spending time with, and we just sit and we put our heads together, and after a drink or two, we come up with really interesting stuff. And here's what I've learned about this industry and lessons from my past is the outcomes and whatever the numbers are in a spreadsheet, like that's one thing to shoot for. But the thing you really remember is the time you spend with people that you care about. And this platform, building Tapp Alpha, um, doing it with investors on equity investors in the company and my coworker Will and all of the teams that we've sort of built and relationships we've built, that's really been the true reward of building what we're building is sharing this experience through that process. That's why Chicago and the bell ring was so special, because it was just this ecosystem of humans that are phenomenal people that are there to support this idea that was nothing more than scribbles on a piece of paper 2 years ago. And now it's real in the middle of an exchange, trading, hundreds of millions of dollars every day. And so I think the surreal idea of it only becomes real if you can share it with people you care about. And that's, I think, at the heart of everything we're doing at Tapp Alpha.
You know, it's like as they always say, when you make it, don't forget your day ones, right? So those people that were there from the beginning, those that helped you along the way, and then when you finally make it, you're able to look across the table or look across the hall, and there they are. And I think that's what humanity should be about. I know we're in finance. We got to chase the dollar sometimes, but I think at the end of the day, humanity, those relationships, those friendships, I think those will last a lot longer than the money we have or the materialism that we chase. But you're absolutely right. That's really good, and I'm very happy that out in Chicago you got your whole team, you got everybody there supporting you. Fingers crossed, I'll be there next time.
Come on, you got to do
But
it. It's gonna, you won't regret it. I promise.
I definitely won't. But no, that's actually beautifully said. And I'm very happy that you do have those kind of relationships and friendships and connections and networking. Because I mean, Tapp Alpha is going straight to the moon. And I love that. So what is the biggest lesson you've learned as a CEO, especially now navigating through rapid growth, competition, and of course now the more of a public market?
I think the biggest thing, and it really hit me hard in April. April was a hard month because of the volatility in the market and just the market performance that happened and how we sort of came out of it. There was a strong like two paths to choose. One, do you fold? Or two, do you press on and find ways to take this mound of challenges that you see and dissect it into one problem at a time? And we took the latter, and in doing so, it taught me the lesson of like, you feel fear when things get hard because you don't want to let anybody down. But the thing that I learned the most, I think, this last year was that everything that I've ever dreamed of or wanted to accomplish, it's all on the other side of that fear. And there's only one way in order to get there, and that's through it. And so, like, you kind of acknowledge the feeling that you have, but you bear down and you just look at one thing at a time and solve one problem at a time and put one foot in front of the other. And then, I mean, in May, we were 20, 22 million in assets. And like we had a big delay because the market volatility like kind of paused the momentum and asset growth. And people were like, what do I do now? Market's going down, market's going up. I don't know where to invest my assets. And so everything kind of paused. So there was this delay. And when you have finite capital to sort of keep things going, you get scared. And I think being able to rely and be honest with people that are close to operating the business to like not have to carry it by myself, that actually brought us a lot closer together. And then investors that believed in the idea of Tapp Alpha, like hearing from those folks to say, look, what you're doing is different than what everybody else is doing. And we need an organization like this out there. And just getting those little votes of confidence help propel you through it. And then once you get through it, you can look back and say that, yes, it was hard, but it was important. And actually, because we went through it, we are 10 times stronger. Our strategy is stronger, our process is stronger, our company is stronger, and most importantly, the relationships with all the people that went through it with us are so much stronger. And I think that's sort of the point, not only in business, but in life. It's the struggle that actually creates value. And it's no different when you're starting a company. And I think that's one of the things that we can hang our hats on.
Nope, you're absolutely right. Whenever there's challenges, struggles, all of that is to build character, to build the person you are, build the company that it is. I always think of it as a video game. You know, you're going the right way when you see a whole bunch of, gremlins or enemies that you got to destroy.
I love it.
So, if you're just mindlessly walking around, you're not going the right way.
I
um,
love it.
it's and so that's actually a life lesson that I think a lot of people should really take to heart, because a lot of people usually shut down at the first challenge or the first obstacle. So I think if they just push through, there's always a light at the end of the tunnel. So Sai, everybody knows you as the CEO, but who is Sai Katara outside of work? What are some experiences, interests might have shaped the leader we have today?
That's a good question. My transition has been really interesting. Like, I was a kind of later in life dad, but now I've got two girls, and spending time with those two little munchkins has really been one of the most rewarding things that I've ever done, but also like one of the hardest. And it's sort of changed everything from a priority perspective too. Like, they are top of the charts. And that's also what makes this so sweet, because like I get to do this remotely. And in between, like if we have a great day and there's a bunch of creates and people are investing or something happens, or Jacob releases his video and there's tons of viewers with like lots of positive comments, I get to run up and snuggle the babies and share it with them. And so that's
Aw.
been a huge, I think, piece of it. It's been phenomenal. And then before, like one of the things I used to play music in a local Seattle rock band, which was a great outlet, right? So you think about, you grind through the workday, but music is like a really powerful release, and it turns on different parts of your brain. And when you're grinding and thinking with like this part of your brain, it unlocks the creative sides. That is something that I miss doing and want to get back to. And really, just like I've been a passionate builder. I've always loved to build things. And so the last company I built, this company I built, the software side of things, all of that kind of creates the foundation for, you know, just my whole thing is like, just create something that didn't exist before you were there and share it with others. And that idea, I think, is so like addicting, because you start to see, it's not really legacy. Like, legacy, people are going to forget about
Yeah.
me and everything else except for my immediate family. Like, I know that. But I like to be able to point at something and say, hey, I built that, or we built that. And it's something that actually adds value. And so that's like been the common thread through everything. It's same thing with children. It's something you created, but not really. Like, they're kind of their own people. I'm just kind of helping them be the best version of whoever it is that they're going to be. But that's been the common thread throughout my life, is just build something, create something, add value, and then everything else will work itself out.
It really speaks on your engineer background, because engineers, love creating, love solving problems, love building. And so I think, family, your interests, especially with music, creating Tapp Alpha, building Tapp Alpha. I think those are amazing traits and experiences, because, they each touch upon a different part of the human body, right? You got one that's the heart, one that's more of the mind and interest, and then one is more the technical, right? You're building a company. And so, Sai, I always ask you this at every interview. Crypto. So our stance on crypto is very similar, but these days a lot of billionaires are shorting other billionaires. I don't know what kind of war is happening here, but what are your thoughts of crypto going into 2026, even though they've gotten a horrible beating the past few months?
Horrible beating the past few months, but read the tea leaves, and this is more of a neon sign in the face. Vanguard just allowed crypto into their portfolios. That Vanguard being one of the most conservative organizations doing that, plus the policies of the administration actually tying, tether, like when you're tying cryptos to fiat currencies, things like that. It's not going anywhere, and it's just getting deeper into the financial systems. So yes, short term, there's going to be beatings. I don't see it going away, especially when you have huge institutions, including the U.S. government,
Yeah.
getting behind it. That was the biggest risk a couple of years ago, was policy related risk. That I think is going away very quickly. And so I see upside, but it's for a different risk profile. And again, like the dips and the rodeo that you ride, if you believe in it, just believe in it for the long term and don't worry about the heartache of the short term because it's too hard. It's going to drain you if you're going to try and keep up that way.
Oh yeah. And just to add on to that, so everyone's obviously talking about CBDCs, digital dollars. XRP Army, they are faithful to their coin. What are your thoughts on that? Do you think the government is obviously they want control? So are they going to create their own and have the control that they want, or do you think that certain coins are actually going to be the eventual dollar or
It's a
compete with the dollar?
Yeah, I don't know. Like I've seen a couple of webinars and presentations about uh, like the US government not getting into their own kind of cryptocurrencies and leveraging other platforms to do so. And they're kind of making bets on those existing ones. So, based on that, I would say that's the way things might go. But just the fact that there's going to be a connection between like dollar-backed cryptocurrencies solves one of the biggest problems I think that's out there with crypto. So, that, it's just a really interesting way to ground what is a really powerful idea with a real asset that backs it. I mean, but the irony though, look at it's so funny when you think about crypto and then you just think about like currency. Currency is no different than crypto. They're both imaginary, right? It's just crypto
Exactly.
has an algorithm that's tied to something. Currencies now, they used to have a gold standard, but now they don't. They're decoupled from that entirely. So what's more real? So, I've never been a big, huge early adopter of crypto, but the idea itself is really attractive and it makes a lot of sense for the efficiencies that you can get internationally by leveraging digital currency. So to me, it makes all the sense in the world. And it makes sense because currency in general is an imaginary idea. And that's also the scariest thing because we
It
don't
is.
think of it that way. So put that into your, equation to figure out what's going to happen next. But it's a really exciting time just to be in finance and to see all these changes sort of come to life.
It is. And I mean, now that, all these quantum chips are coming out, a lot of people are
Oh
saying
my
quantum
gosh,
can break the blockchain. So it's like another thing to worry about. So
never ends.
it never ends, right? Depends what news media you're reading. So before we finish off, are there any plans to expand the suite of ETFs at Tapp Alpha with similar strategies, maybe international index, maybe small cap index?
Yeah, we've gotten, and I would love to hear from viewers too, kind of areas you see. Our sweet spot is going to be kind of zero DTE options-based overlays on underlying securities. We really focused on indices. So, like we've talked about the Russell, potentially Mag 7, Mag 10. And then, we've talked about, it's interesting in Canada, you guys have a lot of issuers that do kind of light leveraged funds. I love that idea because if you're a long-term buy and hold investor and you have a responsible kind of level of leverage, it kind of helps cover maybe some of the risk or the gaps that you have with the covered call strategy of standard 30-day. But then if you do 0-day, you can keep up with the underlying and then you get some leverage too. Like imagine what a combo that would be. So the short answer is yes. The sky's the limit. The nervous part is um, I I get excited about lots of different directions, but there's only so much we can do. So we're going to create a cohesive, very connected path for what our product sort of strategy will be. But a lot of it's going to be built around being the best zero DTE covered call growth plus income ETF issuer and applying that idea to sort of different securities. But I would love to hear from your viewers on kind of the pieces that they would see as a good complement to their portfolios as we're putting our product strategy together.
We love that. We love that. And my viewers, definitely please reach out in the comments, DMs. You can go on LinkedIn. Si is there. So Si, the one thing that you mentioned about Canada is that for some reason Canada has always been kind of ahead of a lot of ETFs because we had the first Bitcoin spot ETF, Ethereum spot ETF. I think we came out with the XRP a few months ago. So it's kind of
Yeah.
weird how our financial laws are kind of so different, but at the same time so similar. So Sai, I always love having you on this channel. You're always the best conversationalist with your wisdom and your expertise, and I love seeing the updates on TSPY and TDAQ, and of course any other future ETFs you have coming up in the channel. So before we head off, any last mentions? Anything you want the digital world to know about Tapp Alpha, TSPY, TDAQ?
Just know that we are eternally grateful for the support that's been provided to sort of get the business to where it is, and know that the company is a reflection of you and the support and the application and use of kind of what we're building, and staying close to us, staying to our, connected to our community is how we're going to build that next chapter and the next evolution of Tapp Alpha. But we went from one ETF, $13 million at the beginning of the year. Now we have two products and just under 200 million. We're going into 2026 with a product roadmap of more to come. But the viewers and the people that have believed in this from the beginning are the only reason that we've been able to have this evolution. And we want to make sure that you stay connected to us to continue to help us sort of develop the next version and the next chapter and the next sort of legacy of what Tapp Alpha is going to be able to build. But just heartfelt thank you. It's such an exciting time, and it has been honestly the experience of a lifetime professionally to build what we're doing, and we couldn't do it without you and without your viewers, and it's just been an absolute pleasure. So looking forward to more conversations with you, and we'll continue to bookmark the growth and the changes that occur over the coming years.
100%. You know, we're building great memories from the first interview till now. There has been some amazing milestones, and I'm looking forward to many, many more. And I'm looking forward to seeing my audience also growing themselves, because they love covered calls. They love when I put on new ETFs or new stocks in their mind, and they double check, they do their due diligence, and then they eventually buy because they're like, you know what? This is amazing. So thank you for the knowledge, and thank you for being on the channel as many times as you did, because we would love to continue having you on more. It's the best wisdom. Like, I'm sure a lot of my people learned so much from today's interview, especially about recession, especially about listing funds, and especially just being okay with whatever's happening around the world as long as they're safe and okay. So audience members, I will have Tapp Alpha, TDAQ, and TSPY information all in the description box. Please check them out. Again, if you have any questions, Sai is very open to your ideas and your thoughts. So you can comment on my channel. You can DM me. You can message him on LinkedIn or wherever other sites that he has, which I'm going to put in the description box. As I said, he loves your thoughts. So make sure that you like and you subscribe. And until the next time, stay ranting.